See, a lot of people consider this to be a breakup structure. So when this happens, they can place their point of interest here and see how to trade immediately price returns back to it. And then what happened? Price just broke through it. Ladies and gentlemen, in this video, I'm going to show you what is a liquidity grab and what is a valid breakup structure, and finally put an end to all this confusion. Because I got some messages from my students asking me what is a liquidity grab and what is a breakup structure. So in this video, I want to address that issue. I want to address the difference between a liquidity grab and a breakup structure. Okay, now before we do that, we need to get things straight. Okay, it all depends on you, the trader. As for me, I give myself a set of rules to consider a particular move to be a liquidity grab or a breakup structure. And the rules involve, number one, your time frame. Okay, your time frame. Whatever time frame you're looking at, be it a 1 minute, a 1 hour, a weekly time frame, just like this one, that time frame should help you define what is a liquidity grab and what is a breakup structure. You do not need to go to a higher time frame to see if what just happened, for example, if this break, okay, if this break was a liquidity grab or a breakup structure. You don't need to go to the monthly and see what happens there if the monthly actually give us a liquidity grab. No, that is the wrong approach. Okay, your time frame that you are should define if something is a breakup structure. Like this here, this is a breakup structure because I'm on this time frame. This is a breakup structure in line with what? One, the weekly time frame. Okay, your breakup structure is always in line with your time frame. Okay, and a liquidity grab also is always in line with the time frame. So do not check 2 or 3 time frames to know if what actually happened on the 15 minutes is a liquidity grab or a breakup structure. Okay, and number two, you give yourself a set rule. Okay, a set rule. Okay, now I'm going to share with you my rules, what I see as what a break and what I see as what a liquidity grab. Okay, now for a break, okay, let's assume we have price moving up and we have a break to the downside. Okay, the moment I see this, okay, I want to see a candle close below this low. I want to see a candle close. If I see a candle close, I consider it a break of structure. Okay, a candle close. That is a set rule that I gave myself and my trading. A break of this line with the body close signifies a break of structure. Okay, but if it is a wick, okay, a wick that pierces through it, then I consider it a liquidity grab on this time frame, on whatever time frame I'm looking at. If this happened on the 15 minutes, I will call it a 15-minute break. If this happened on what, a 1 minute, a 15 minutes, I will call it a 15-minute break of structure. I don't need to go to the lower time frame or to the higher time frame. Okay, so I'm going to show you on the chart what I see as liquidity grab and also as a break of structure. Okay, first of all, for those of you that are new, I need to explain this further. Now, how do you consider a break of structure in the first place? You must have swing points. Okay, you must have what? Swing point. You must have what? Swing point. Now, what is a swing point? A swing point simply means potential turning point in the market. Okay, for example, to define a swing point, you need a 3 candle. Okay, you need 3 candles to form in this manner. When the 3 candle forms, For a swing high, you want the middle candle to be the tallest, both in wick, okay, both in wick and in body. It could be either, okay, it could be either the wick is more than this or the body. Okay, this is a swing high. Okay, now your swing low is the same thing, but in this case the middle candle is the lowest, either with a body or with a wick. It doesn't matter, as long as that candle give us the lowest low, as that's what we're looking at. So your swing point is simply from this high to this low. Okay, from this high to this low. So that's what we mean when you see us draw this. This signifies what? A swing. Okay, now let's look at what considers what a valid break of structure. In this case, we have a high. This was the recent. This is the low that needs to be challenged. Okay, so we can see this candle finally closes below. Now if you look at this high, all this is not a break of structure. You can see that the wick passes through it. Okay, it passes through it. I do not consider this a break of structure. Okay, I do not need to go to the monthly and see what happened there if the monthly actually closes below or the lower time frame. Based on my set of rules, on first of all, I'm looking at the weekly time frame. So whatever I see on the weekly time frame will determine what to do. So in this case, we do not have a break. Okay, we don't have a break, so therefore I don't consider this. But you see this other one here, this to me is a valid break of structure, and I'll tell you what to do, how to trade them, both liquidity grab and a BOS. Okay, now listen to me, stay with me. If you have a liquidity grab, okay, if you have a liquidity grab, that high or that low that produces that graph most times will be taken. Okay, example of this was the call I made on Bitcoin here. I made this Bitcoin as at January when the price was around there. It was in January. I uploaded a video where I analyzed 5 pairs. Okay, and one of those asset class was what? Bitcoin. So when I saw this low went up, clear this, but do you see a body close? There was no body close. Okay, we do not have a body close. So as a result of that, I knew that this low is a weak low. Okay, because a weak low should create a break of structure, and to me, in my rules, this is not a valid break. Let me make it bigger. This is not a valid break. This is the high that we are looking to close above. But what happened? Price traded through it, came back down. Price traded through it and came back down. So this signifies what? A liquidity what? Grab. Price only went to grab liquidity. So on his way down, this will be taken. Okay, and that's what I do. When a high or a low fails to create a break of structure, that becomes a weak high or low. Okay, a weak high or low. So this is a perfect example in the Bitcoin space. Okay, and you can see currently this high also fails. If this month ends, okay, without the candle close below, then this initially is what? A liquidity grab. Now what will confirm me to finally conclude that this swing low, this swing high will be taken, is if we have the next month. No, we have a swing point, which first, second, third, the second candle is the lowest. If this becomes the lowest candle among these three candles, then I know that the swing point has been made. So therefore, my first target will be this, my second target will be that. So you can start buying Bitcoin. Okay, but at the stance, the month of May is still ongoing. We can still have a push down. Okay, I'm only using this to clarify something, that a break of structure must have a close above. Okay, if you look at the Euro USD here, now currently we have a close below this low. Okay, this is a close break of structure, but the original structure we are looking at is this. This was the low, the last low that produced this high. Okay, and this high needs to break structure. Okay, this high needs to break structure. So until I see a close of a break of structure here, I will be looking for bullish sentiment, because though the month is not ended, but if by June we still have a candle that did not take out this low, then we might see the final leg on the what Euro USD, and we can have a small retracement up until this point. So what I'm sharing with you here is more like an analysis, and that is how I simply do my analysis, by understanding what is a liquidity graph and what is a valid break of structure. Okay, if we look at the chart again, let's see. Now this high went below this, we have a close below, so this is a break of structure. Price came back in, I'll be confident to what, to buy. Okay, but this high did not break this. Okay, this high did not break this. Okay, so therefore this to me is not a valid higher high. This will be my valid higher high so far, not this. So this will still be the point where I'll be looking to confirm the selling, because all of these are inducement. That's another thing. Any high or low that created a liquidity graph most times are what, inducement. That's another rule. Most times they are what, inducement. Like in this case, this did not take out. Normally, as this other block got respected, okay, this low was to create a break of structure. Okay, even though it didn't have a strip, a graph. Okay, it simply created, is an inducement. Even if it's a grab of liquidity, it will still be an inducement. Okay, for price to come pick up later. Okay, let's continue. Let's see one more. Let's look at USD. But mind you, not all break of structure is tradable, because if you look at this now, for example, we have a break, even though it respected for a while, price came down. Why? Because the momentum is what, bearish. We have a bearish what, push. So you are simply trading against the trend, and in that case, as I keep saying, direction is the key. If you understand the direction of the market, you have less losing trades. Okay, but in this case, this is a valid break of structure, valid, and you can trade here. We have few pips up here, from here, okay, up to 500 pips. You could have taken that trade because it's a valid break of structure. This high, we did take this low. So up until now, this high has failed to break structure. Okay, up until this candle close. So this is a close. So with a rule, once you have rules, it makes things what, easy for you. Okay, you have less what, confusion and so on. I did a video about break of market structure. The link will be in the description. Go and watch that video and have more clarity. If you really want to understand the break of structure and how to trade it, I will see you in this video.